now with us to discuss is Larry Summers. He served as Treasury Secretary under President Bill Clinton's administration. Larry, thank you so much for being with us. So you heard the Treasury Secretary there shrugging off China's escalation, claiming that it's going to be a loser for them. I wonder who you think has the advantage in this trade war, the United States or China?
I don't think it's about who wins and who loses. I think it's about everybody loses. I've just got to say that hearing the Secretary of the Treasury refer to a European ally like Spain as cutting its own throat was very sobering for me. I've resisted the idea that the United States was behaving like Don Corleone in The Godfather. But when I hear that kind of rhetoric from the Treasury Secretary, I have to wonder. I don't have any idea who's going to be hurt worse, but surely the objective of our policy is to help ourselves, not to hurt other countries. And if our goal is to change China's behavior, I cannot imagine a less likely to succeed strategy than alienating with threats and with punishments every ally that we have. Markets, if you extrapolate from the market response to what has happened, the cost to the U.S. economy of what we're doing is probably $30 trillion. This is really a major blunder by the United States. I think the idea that somehow we're going to get out of this without reversing our truculence is really quite unlikely.
And Larry, what do you make of investors now selling off both stocks and bonds? That's an ominous sign.
It surely is. Look, it's not unfamiliar in the world. It's the normal dynamic with respect to countries that have pesos as their currency. Emerging market countries, when people think that the rule of law is deteriorating, when people think that the country's being mismanaged, they sell its stocks and they sell its bonds too. They sell everything. And that's the way it works in countries where political risk is the big thing. Traditionally, the United States hasn't been that kind of country at all. Rule of law has been secure. The dollar's been a central asset in the system. And so when things get risky, when stocks go down, people want to put their money into dollars. And so our treasury bonds prices go up and their yields go down. So what this is saying is that we're becoming more like an emerging market country, more like a country with a peso rather than a dollar as its currency. And that's something that past Treasury secretaries were always very focused on avoiding. And so I'm really sorry to see this administration moving towards that.
What do you make of the argument, though, Larry, from folks in the administration that the dollar being so strong and being this haven has been manipulated by countries like China as a way to weaken their currencies, as a way to prevent U.S. products from being imported into their countries and maintaining trade imbalances? It doesn't sound like you buy that.
First of all, I think I'm one of many Americans who likes to buy things at lower cost rather than higher cost. And when the dollar's stronger, whether it's toys produced in China or coats produced in Europe or textiles produced in India, when the dollar's stronger, the things we buy are cheaper. Second, when the dollar is really an attractive asset for people, then when you want to borrow money in US dollars, you can borrow cheaper. And that means more affordable housing and more affordable cars for American consumers. So yes, we've got to support US manufacturing. That's why I thought it was so dangerous and misguided when the president abandoned and declared war on the CHIPS Act, which was generating major investment in what's a central industry for the future, semiconductors. But do we really want to be trying to drive down our currency? I think markets will fluctuate, and what we should want to do is have a stronger economy that supports a stronger currency. If some other country is manipulating its currency downwards for advantage, we've got a set of procedures for that. They're written into law. The Treasury Department writes a report. We ask for consultations. We're able to pursue that. So yes, we should go after manipulating exchange rates, but declaring war on our own currency, that seems to me to be a way to make America poorer and our economy much riskier.
One quick final question, Larry. As prices for consumers have been rising, it seems like the president and the administration are banking on Congress to alleviate some of that strain with tax relief, whether extending the 2017 tax cuts or eliminating taxes on tips, Social Security, overtime, et cetera. How do you think that effort to drive growth might offset these tariffs? Will it actually do that?
It will for wealthy Americans, but it won't for most Americans. The Yale Budget Lab estimates that for the average middle-class family, the tariffs are going to add $3,800 to their costs. I don't think they're going to get anything like that kind of tax benefit from reducing taxes on tips. Frankly, they don't report a fair part of their tip income anyway right now, and nobody's paying $4,000 on their tip income. So I don't think that the offset is likely to be sufficiently large. And I think for most families, the recession that this is fairly likely to generate is actually going to do even more damage than the direct effects of the tariffs themselves.
Larry Summers, fascinating to get your perspective. We appreciate you joining us.
Thank you.